John Piper with the weekend video clip, and it's Saturday the 31st of August, and we're going to start with Bitcoin this morning. If I can get rid of this little box that's popped up from nowhere. Right, well, back in December we saw the low at 3126, we saw 5 waves up, all clear. We've been in a correction since the end of June, and the key levels, as I've been saying for a while now, are the 61.8% retracement around 7226 and 50% around 8500, which is here. This move has thrown out various different targets, and let's have a look at the actual form of the correction. The two key targets for now are 7540, where this A is equal to what might be a C coming in here. That's the target level there, 7540, right in the middle of this band between the 50% and 61.8 retracement levels. And the other target is 8200, whereby this C wave here will be equal to this A wave here. I mean, exactly how it pans out remains to be seen, and what we want to look at now is the action since this low here. Right, so we take the current C wave decline, which starts up here. We have what I'm calling an A, a B, and now a 1, ABC2, and I believe this is a 3 in progress, a bit messy at the moment. What you will see is that we're seeing this break below the lower parameter of the triangle we were looking at. I'm now seeing this failed retest of that parameter. It's all very dithery, not much is happening here really. I think there's a range of possibilities, but I think we are going to go lower. Having seen this break and the retest, then I think that the next stage is going to be this fall, and it may be a truncated 5, but I think we're going a little bit lower, and there are those targets which I've been mentioning. So I mean 8.2 is probably the next key level to look out for, and I can see we might well see 5 waves down by the time we get to 8.2. So no change of opinion. We're looking for a very important low coming in. Once that low is in, then we should see the rally I've been expecting. And so far the time parameters are fine, and the price parameters would be a little more respectable at slightly lower levels on Bitcoin. Right, silver, since this low down here in November, around 13,865, we've seen a 1, 2, and now a 5-part move. I think it's 1 of 3. Okay, so this is just the first part of 3, I believe. And we're now due a bigger correction with the Fibonacci levels, 38.2 up to around $17, 50% around $16.50, and 61.8% around $16. So I think those are the key levels here. We're going to may well retest. I mean, it may be a subnormal decline. It looks like a big bull market starting up for good fundamental reasoning, money printing of the fiat currencies, and various areas where financial turmoil could descend upon different areas of the world. But anyway, we are due a correction. I think a fairly large correction to be 2 of 3. So this is 1 of 3, and we've got 2 of 3 coming in. So sort of gold. All right, gold saw the low a little bit earlier, back in August, 1160. Looks like a 1-2. We've discussed that fairly completely. This rally is becoming a little bit complicated. Let's scale in a bit. We're looking at gold. I've changed the counter a bit. So we had the big wave 1 and 2 to there, and 5 waves up was 1 of 3, 2 of 3, and this is 1 of 3 of 3. So I'm making that a more important peak than I did previously to harmonise with silver. So I think it's going to be a bigger correction. So maybe with ABC, B, maybe C. I mean, it has a potential to go down a fair bit after the rallies we've seen, I think. But I think this is a solid bull trend, so again, it could be subnormal. But I think it is time for a bit of a sell-off on gold. All right, turn to the S&P. We have the Allen reversal. We've discussed that back in July. We had the initial sell-off, quite sharp and impulsive. And so far, we've been going sideways in this triangular formation with a peak coming in, which could be the peak of E yesterday. So let's have a look at the action since then. Well, the 5-minute chart shows a possible 5 waves down from this peak here. 1, 2, 3, 4, 5. Very short term though, with an A, ABC, BC, with a spike, selling spike there. So we could easily continue here. I mean, my scenario would be that we're now in an interesting time of year. The October expiry is particularly critical in my experience, but September also can be unpleasant. So we start to sell off. You could see a wave 1 and 2 of 3 into one of those two expiries, and then a nasty acceleration phase after those expiries. That's a time frame I'll be obviously monitoring as we go forward, but it looks like a possibility we have started a more serious decline here. Alright, the Dow, same basic pattern. Big 1, 2, 3, 4, 5. On the 5, it could be a 1, 2, 3. This could in fact be a 4 in the making, and one more rally just to confuse everybody. And before we see the sell-off I'm expecting to come in, that's certainly a possibility. On the DAX, we've got 5 waves down also from this peak. We've got a rally into the same band, 50% to 61.8%. We've got an ABC form, A, B, C. Again, it could be a little bit higher. There's no reason why it shouldn't do. Of note on the DAX is the fact that this C wave, that's what it is, would equal the A wave just above 12,000, around 12,070. So a poke above 12,000 would probably encourage the bulls, get some buying to come in, which is what the market likes, and then it would then perhaps reverse. So that's something to look out for on Monday, I think. Actually, there are some holidays, I think, Monday, but I think the DAX is open. And finally, look at FTSE. We've got the same basic pattern, 5 waves down. A very weak ABC on FTSE, in fact. I guess Brexit maybe is draining people a bit. So we haven't even managed to retrace 38.2% yet. ANC look about equal, so there is a potential here for a sell-off. Let's look at the 5-minute chart. Well, a very unhappy looking correction already. It seems to be very, very, very sluggardly. Not too encouraging at all, really. So, I think all these markets look like they're due more downside. Maybe see a little bit more upside first, but not too much, I wouldn't expect. And then perhaps some quite serious selling later in the year. So this obviously these sort of moves are clearly of interest and quite important. Easy way to trade the kind of thing is actually to buy an ETF that tracks to the short side. There's a fair number of those around. And that goes with most things. In fact, you want to catch big moves in the markets, and buying relevant stock or ETFs is a much easier way of doing it than spread betting. But obviously, if you've just developed the skills of spread bet, that's also a highly profitable way of doing things. That's all for today. If you found it interesting and useful, back to the report on Tuesday morning for subscribers. Have a great weekend. Thanks for listening, and bye for now.